Interest on
Hello
loans has been
guys.
reduced.
Do you know that interest rate on loans has been reduced? Anything above 25% is too expensive. Now, before we continue, I am Dr. Victoria Bentasi, and my purpose is to bring you information that's going to enhance your financial well-being. All right, so before we continue, engage from bottom up. Share this educative information with your loved ones. Share them, add to your favorite, comment, and like. With this, TikTok have no option but cause this video to go viral so that multiple will have this knowledge. Okay, so let's move on. Also, when if you need information, anything, any investment, shares, treasury bill, anything, just comment in my comment section. That be specific. Ghana Gold Coins, specify it, then I will inbox you with the information. Okay, so Ghana reference rate has been reduced from 23 to 23.69% to 19.67%. Ghana reference rate is a base rate that was introduced by Bank of Ghana to for banks to base on it to determine interest on their loans. Okay, now this is a policy to prevent banks from setting strange and abnormal interest on the loans we go for. So it is a regulatory policy that is protected us. Okay, so it was reduced from 23.69 as Ghana reference rate is affectionately called JNRR. JNRR was reduced from 23.69% to 19.67%, and it took effect from August 6th, 2025. So every bank should by now we have reduced the interest they charge on their loans. Now, this reduction came as a result of reduction in the policy rate. We all know policy rate was 28%, and it has been reduced to 25%. And in response, as policy rate being the main determinant of the Ghana reference rate, the Ghana reference rate also has to be reduced. So it was reduced to 19.67%. Now, how do banks determine the interest they charge on loans? What they do is that they pick the reference rate and they add our risk factor to it, the risk factor of the customer. Now, what is risk factor? The possibility that you might not pay the loan at all, or you might not pay it as you are supposed to pay it. Okay, now the risk factor is between 2 to 5%, and this is based on what you do. So let's say salary workers, they take their salary from the bank or through the bank always. Before you will go for a salary, the amount has been deducted. Controllers, those take their salary, government workers, controller will deduct the money before you go for your salary. So you are less risky. Okay, less risky. Now let's go to SME. Someone who operates his business is considered more riskier than someone who is doing what? Who is doing salary work, because anything can happen within that period of repaying the loan or paying back their loan. Anything is going to can happen. It might be that business might not boom. It might be that in the event of the person come to pay the money, there might be an emergency that will take the money from you, because the person has to decide to be that he will be paying the amount. If it's monthly, there's going to pay every month. Okay, and those things can sometimes certain things prevent it. So then this risk factor, we can say that salary workers, their risk factor, they will probably add 2 to 3%. Okay, 2 to 3%, because you are considered less risky. Now let's go to SMEs. They are likely to add 4 to 5%. Please, that doesn't rule out the fact that some SMEs or some businesses are considered less risky, because the cash flow the inflows is very active, and so therefore they are considered less risky, and they might still give them 2 to 3%, because probably the bank have worked with them and they have a very good credit score with them. Okay, so this means that if you go to a bank today to take a loan, anything that about 25% is high. So the ranges, so and I know that interest on loans now is between 22% to 25%. 22 to 25%. Anything above 25% is too expensive go to a different bank. Another question that people sometimes do ask me is that amount that they take when you take your loan. And most of the people, when you ask them, they'll just tell you processing fee, and this rate is between 3.5% to 5%, meaning that when you take your loan, they are likely to deduct that amount from it before they give them, and then the balance or the rest will be given to you. Okay, yes, there are some banks who will not deduct, but even if they don't deduct, know that they will add it to the interest that they are charging you and spread it on your what, on your loan. So you will definitely pay for it. Now this processing fee constitutes, or it's made up of insurance. So part, they insure your the loan you take, so that in case of death, and they say you are disabled to the extent that you cannot work. Please, these two, death or disabled, any other thing, if you lose your job, it doesn't cover, you still have to pay. So when you die or you are disabled, then the insurance company would have to pay back the loan to the bank. Another thing is monitoring. The next one is management and processing fee. So this is the four components that make up the processing fee. All right. So note, Ghana reference rate has been reduced to 19.67%. And as of today, if you are going for a loan anywhere and it's above 25%, it is too expensive. It is too expensive. All right. Share this information with your loved one. You also go to my YouTube account. There are lots of videos there. The same name, Dr. Vicky, the finance expert. Engage with this video too. Thank you.